Welcome back to our special show, Mallyamess, Failures, Frauds and Bad Loans. We have been speaking with Mr. M. Damodaran, former SEBI chairman and even currently member of independent member on several boards. Mr. Damodaran, before going to the break, you were telling us that we should distinguish between failures and frauds and not tar everyone with the same brush. Now, the point is that we find a lot more bad loans with public sector banks than we find with private sector banks as a percentage of total loans. So is it that government is a bad owner? Is it that, there is a problem in the way in which government manages its banks?
No, government ownership need not come in the way if government behaves as owners should behave. But somewhere in the anxiety to see that banks serve a larger public purpose, and it's not a bad thing, the government sometimes tends to step into the areas of management, starts looking at numbers. At the end of the day, it's not the sole owner, it's only a majority shareholder. What happens to corporate governance? Are you, because you're a majority shareholder, asking more information, asking for more involvement than the average shareholder is entitled to do? So it is a question not of government as an owner, but how government is conducting itself as an owner. Government ownership is not a bad thing. I am in favor of majority government ownership for institutions that are required for ensuring that a country as heterogeneous as this, is enabled to make all-round progress. Who took the bank branching to the remote areas of the country? Not the private sector banks. Who took taking the banking habit there? Who opened the Jan Dhan accounts for financial inclusion? So somehow the minute the NPA problem comes, suddenly everybody falls over one another in trying to describe all of these as a bunch of black sheep. And I think we need to recognize the good work, the bad work, put corrective measures in place, but don't create a climate in which you will force them into indecision, as you already might have done.
Well, I take your point that there was a purpose that public sector banks did serve. But, how should, the government clean up the bank boards? It is clear that the boards have not served the purpose. Should the method of choosing board members change?
I think the real reason is that you have not invested enough time over the years. I'm not talking about the last 2 years, the last 5 years, but over several years. You've not invested enough time in selecting people for the top jobs in public sector banks. When you call a large number of people for so-called interviews on one particular day, when half the committee is absent during the process of interviews, and when you select executive directors, you're selecting future chairmen, they're only one step removed from leading the bank. If that's the time, the quality of time, as well as the time in terms of minutes that you invest per candidate in the selection process, clearly you're not giving it the seriousness it deserves. And then to say, the banks don't have leadership, of course they have leadership. Look for it. Look for it. I know that both Governor Rangarajan and Governor Jalan spent a lot of time in the appointment board meetings going through the merits of individual candidates before selecting them for the top jobs.
Well, that point is taken, Mr. Damodaran. A little while ago, you were pointing out that nationalization did lead to a bit of financial inclusion. But on the other hand, now we have payment banks, which are largely mobile companies. They are much faster. They are more empowered in financial inclusion. Also, we have small bank licenses, microfinance institutions. Is it at least time now that the government brought down its stake in public sector banks to less than 50%?
No, if you can go to 49%, then you go to 0%. You can sell the whole bank. There's no great merit in 49%. You're either a majority owner or you don't need to be a minority owner. Because there are enough private sector banks in the country. You add a few more, it's not going to hurt the system. The point is you will need some public sector banks. Do you need 19 banks, and including State Bank 20, and I'm not counting the State Bank's associates? Do you need 20 banks in which the government is a majority shareholder? You don't need. Consolidation is possibly one way to simplify some of the problems that you have because of diversified ownership and your own majority, shareholding institutions competing for business with one another. All of that is something you need to address. But do you need public sector banks? The answer to my mind is yes. In the foreseeable future, you will continue to need them. The kind of banks that you spoke about, the new license holders, I wish them well. I hope they meet the needs which they are supposed to address. But that's something that time will tell.
Okay, what about the Bank Boards Bureau, Mr. Damodaran? Do you think that is a good answer to improve the quality of public sector board functioning?
No, that's not the answer to my mind. Is the Bank Boards Bureau an empowered bureau? Is it going to take the decisions? Is it a recommendatory body? If it is an empowered body, then you need to amend the act, because the government is charged with the responsibility of appointing the chairpersons, and any shareholder can question how this has been outsourced to somebody else. If it's a recommendatory body, I think, the appointments board, as earlier constituted under the RBI governor, should be at least as good as this board. And this board has all eminent people. And the interesting thing is, all very good people, all the 4 people that are on the board. I'm not talking of the government representatives because they're ex officio, but those chosen by name and by track record, excellent people. But do you recognize that Dr. Khandelwal is a product of the public sector banking system? Mr. Vinod Rai has been on public sector bank boards. Rupa started her career in IDBI, and Sinor was executive director Union Bank before he went to ICICI. Are public sector bank boards, are public sector banks that bad if they have thrown up people who today are tasked with the highest responsibilities in the banking space?
Well, I take your regard for public sector officials, Mr. Damodaran. You yourself are a shining example. But not all bank boards were staffed in this process. Reserve Bank senior people, retired people have told me that Reserve Bank was asked to do due diligence on PSU board members, but no details came to them. Often the list of selected people would go directly from the party headquarters to the appointments committee. No due diligence was done in many cases.
There have been odd cases in the past, but I can tell you from personal experience, I assisted the appointments board several years ago when I was in the Ministry of Finance, and I have interacted with 2 governors there. There were finance secretaries on those boards, there were deputy governors of the RBI, there were banking secretaries on those boards, and there were 2 outside experts on those boards. And I had the privilege of serving that committee for a few years. And I can tell you that each candidate, let me take a name, Dr. Khandelwal, you can ask him. He was interviewed for 30 minutes. He was subject to a lot of questions. It is after that he got selected as executive director. And I'm only taking his name because today he is tasked to do much the same thing in the banking sector. Today, do you give 3 minutes to each person? Is the entire board sitting there, the selection committee? I have seen RBI governors and finance secretaries actually looking at, does this person meet the requirements of this bank? And if I can take specifics, when Mr. Krishnamurthy and Mr. Leeladhar were both eligible to become bank chairman, and there were 2 vacancies, the board consciously decided that looking at the bank specifics, Leeladhar, who was number 2 in the list, would get the first vacancy because Vijaya Bank needed credit appraisal skills to be shored up. Syndicate Bank needed some strong arm disciplinary thing, and therefore we reversed the order and Krishnamurthy had to wait, though Leeladhar, who was his junior, was given the chairmanship first. So you were looking at what a bank needed by way of leadership at that point of time and responding to that. Are we doing all of that today? I'm not so sure.
Well, so finally what you're saying, Mr. Damodaran, is that the procedures are in place. Sometimes intent is lacking. In that case, what is your advice to the government to ensure that, you spruce up the act in public sector banks?
One is revisit the composition of the bank boards. You don't have to amend the act for it. Talk to people, figure out how individual members of the board are performing, how collective members are performing. Look at attendance to begin with. These are published numbers. I urge you to look at the attendance figures of people on the bank boards, and then you will see how much attention some of them are giving bank boards. If they don't have the time, they should not be on bank boards. I don't want to get specific, but if you look at the numbers, you will know the attendance numbers. Number two, there seems to be a feeling that if there are difficult cases coming up before the board, if you absent yourself from the board, maybe then you are, in a sense, insuring yourself against any possible penal action if wrong decisions or malafide decisions are taken. Now, absence is not a good enough defense. People should know when they get meeting notices, and later when they get the record of decisions and they are informed, then they are put on notice and they can't go to sleep on that and say, I wasn't there when that decision was taken. This is something they need to understand. Number three is, I think the regulator needs to take its persons out of bank boards. There's a conflict here. If you have senior level representation on bank boards and you are then looking at regulating them, you are in a sense regulating an entity where you have a senior representative. You are a judge in your own cause. I don't think going forward that's a great thing to happen. Where if you are concerned about the way bank boards are functioning, ensure that they have the right people on board. You don't have to put one of your serving officers on the board. That's not the correct solution. And then, having ensured that the boards are good enough, ensure that the boards then become the decision-making unit for distinguishing between well-intentioned decisions which have gone wrong, bona fide errors, and decisions which were mala fide ab initio. Now, the minute the board is tasked with this, they will take it a little seriously. The minute this decision gets outsourced on what is bona fide and what is mala fide, then clearly the board is not doing what it ought to be doing, because it is the board which is supposed to provide superintendence, direction and control to the management. It shouldn't be found wanting in that.
Well, that's, I think, an effective defense defense in favor of strengthening bank boards and not passing on the responsibility to the Bank Boards Bureau. Mr. Damodaran, thank you very much for joining us with your perspective. It's an invaluable perspective, and I think the key takeaway we have from Mr. Damodaran is that whether a management and a managing director and the ED's decision is mala fide or bona fide should be a decision taken by the bank boards. That is the way to make boards effective, and therefore public sector banks and banks in general more effective. Well, we'll have to wait and see how the Bank Boards Bureau works and whether eventually it ends up empowering bank boards, creating more powerful boards which will ensure that this problem of bad loans doesn't repeat. Well, out of time on the show. Thank you very much for watching this edition of MALLYAMESS, Frauds, Failures and Bad Loans.